Hello, good morning. Welcome everybody to our this week's episode of Bulls, Bears, and Breakfast. I hope you guys have your coffee ready already. We want to talk a bit about charts today, a bit about what is ahead this week trading wise. I think the market structure has a little bit changed after the interest rate decision last week. So there might be some new trading setup soon to come onto the market. We want to look at those, of course, today. We also want to talk a bit about what's ahead down the road for the cryptocurrency markets as we are slowly moving into the fourth quarter of 2023 and leaving the Shocktember, I want to tell, I want to name it behind us. You guys know September always historically speaking, one of the worst months for cryptocurrencies. I think the past 13 years or 12 years, 13 years, there only have been 2 months with positive returns for Bitcoin and Co. In September. But going in October, the whole picture probably will change. You can, of course, as always, share your questions here in the live stream. I see CatchBG already wrote something there. How are you doing this morning, CatchBG? If you're watching this live, please share your question here later on. I'm going to answer some questions. DYS is there as well. I never know how to pronounce your name correctly. As you might have noticed, I have a little bit difficulties always with pronouncing names. Anyway, if you're watching a recording of this, of course, feel free to leave a comment underneath also. Then I'll come back later and answer your questions. Of course, alternative, you have the classical way also of contacting us at academy@primexbt.com. I'll answer all emails also here, always personally. All right, let's jump right into the action, I would say. Let me make my chart a little bit bigger. I would like to start here a bit with with the current market structure, as I like to call it. I think some things are unchanged still. So it's a bit continuation of what we've seen. That is especially true here for Bitcoin. We are still lingering around here, this area of 26,000 US dollars. Had a little bit uplift there in the past week, but last week we slowly stumbled down, and you can see always when I zoom in here a little bit, we have, I'm not saying massive wicks here at the moment, but the market is really undecided. So whenever you see candles like this that kind of end up like in the middle, I think there's a name also if you're for this type of pattern, if you're into candlesticks patterns, there is it called a doji? I'm not so sure. You notice I'm not much of a candlestick guru here when it comes to forecasting prices, but this shows the wicks to the upside, to the downside, which shows the uncertainty of the market, and for a good reason. Because what we saw from the Fed last week was, they kept the interest rate stable. But then later during the speech of Jerome Powell, they also said, guys, just because we are keeping them stable, we are still looking at inflation. We are determined to do everything that is in our might to bring down inflation. So the possibility of more interest rate hikes maybe later this year is still not out of the window. So what does that mean? That means everybody will now in October, of course, have a big eye again on the US inflation data. Until then, I don't really expect that the markets are going to make great moves. However, what is really nice to see is if we look here at what the S&P 500 was doing the last days, we really saw here the slump down after the inflation, after the last interest rate decision here, stopped at my support area here at 4,316 roundabout is this area of support here. I said it yesterday also on our Telegram channel. This potentially is an area where you could build up speculative longs, in my opinion, at the moment. So really at those prices we are seeing here. And if you choose to do so, however, be sure to also have a stop loss. So somewhere in around this area, 4,275 to 4,280. Because if we really close below this line of support, the likelihood is very much there that we're going to drop all the way down here to the 200 days moving average at 4,200 points. So that would be our next area of support. I don't see, it could happen. It's not out of the question. However, down here, then slowly, I think we have a good area also to slowly start up building swing trades again, because contrary to what many market participants seem to believe today, I don't really believe that we are going to see this massive crash. Yeah, I've read yesterday again a lot of stuff like about US debt, which I'm going to comment also later on, later this week on the Telegram channel about, and how the inversion of the yield curves 10 years to 1 year is going to cause a recession or as a sign of a recession. And in the past, this always caused a market crash. I think differently about this. I don't want to talk too much about this today. It's a rather complex topic. So more on this later this week on the Academy Telegram channel. So let's quickly go back here. So why did I show you this now? Because the stock market suffered more actually than the cryptocurrency market. So Bitcoin, I'm using here, of course, Bitcoin as representing the whole cryptocurrency markets. Why? Because Bitcoin has a dominance here of almost 50%, also has recently come a little bit more down again, meaning half of the cryptocurrency market cap is made out of Bitcoin. So of course, if Bitcoin moves, the whole market is going to follow. So we see here Bitcoin still being stable. We looked a little bit below 26,000 here yesterday, came back up again. For me, like swing trade wise, there is not really it's not really necessary to do something there, in my opinion. What I would do at the moment is, or what I'm doing actually for swing trades, you could place limit orders here, 25,000, that has been an excellent support. This is also where we were last time reflected here, when we had this massive down candle, massive followed by massive up candle again. But it was 2 crazy days of a return of volatility. Even more interesting for me here is down here, this area around 23,700, which is not out of the question for me that we are still going to see prices like this. If the market gets a little bit nervous, we could very quickly go down here. Long term, it doesn't make difference. If you're playing the long-term game, you want to accumulate cryptocurrency, you want to accumulate Bitcoin, you know, these prices are good to do so, in my opinion. Don't try to catch the absolute bottom there. So I'm really talking here right now about swing trades. You guys know that since September last year, I think the latest editions I made in the second quarter of this year, I'm all into stocks and cryptocurrencies again, because I think we are building up a new bull market. I think that we are going to see interest rates coming down again next year, and this is going to be around the time of the next Bitcoin halving, and this is going to cause a massive bull run. But we'll see, of course, over the course of the next months how this is going to play out. Yeah, I said it here in the S&P 500. Quite interesting, actually, here at the moment, this area, in my opinion. So possible swing trade entries right now. However, be prepared to have a stop loss. We also dropped below this trend line here of this long uptrend we had now since late October 2022. So it's kind of interesting. In order to maintain this trend, we would need to go above 4,350 again. So let's see how that is played out. For me, I'm not taking long positions here at the moment. However, should I see now, for whatever reason, maybe because of bad data or whatever, which we are going to look at later on the show, it dropped down to this area here between the 200-day moving average, 4,207 at the moment, 4,187, 4,200, this area of support. For sure, I would like to play along there if like the news are not so bad that, you know, it doesn't make sense to have any longs there. Quick look also at euro dollar, and here it's really declining. We broke through this area, this almost last support here. I have to draw new ones now because we are coming into areas that we haven't been for months. First quarter 2023, we were the last time down here. So you see a lot of US dollar strength, which is natural because people, institutional traders, are flocking into US treasuries, which means they have to exchange their currency, for example, the euro, to buy the US dollar. This is why you see this decline in euro US dollar. And you can see here the 10-year treasury note. So what if you buy a debt obligation from the United States with 10 years, you have a yield of around about 4.5% that moment. Has massively come up with all the interest rate hikes, obviously, as well. The question here, of course, is how long can the American economy sustain this? Because this is, of course, having an effect on people who have mortgages on houses. We see bankruptcies. I wrote about this yesterday also on the Telegram channel at a record high at where we were last time during Corona and during the 2008 financial crisis. So it's going to have an effect definitely on the economy. And I think this is ultimately then going to cause interest rates coming down again. Quick look here, because I know some of you guys also are always active trading gold. So let's have a look here as well. And I'm repeating myself like almost every week there. I don't see any reason at the moment why I should buy gold. I'm, first of all, not a big fan. I said it over the course of the last months. Whenever we are in this zone here above 2,000 US dollars per ounce, this is for me an area where I short gold. I don't see it like some other gold bucks out there go to 3,000, 5,000 or 10,000. Gold is not that much of a crisis currency anymore, in my opinion. We see that also, yeah. US dollar going stronger, gold going down here at the moment, trading below the 200 days moving average. So if you are like in love with gold, if you see okay, I want to buy here, I mean, maybe around 1,900, there's a chance for a small long, but I think it's a dangerous one. It's a game I'm not willing to play at the moment. Recently, oil also last days came a little bit down. I, however, always wonder, why whenever oil goes up, I see the prices at the gas stations rising. When it goes down, well, the prices at the gas stations don't fall. It just gets more and more expensive, especially here in Germany, in the area where I'm living. So yeah, that's it for pretty much for the charts at the moment, in my opinion. Let's look a little bit ahead of what we are going to see in terms of economic data this week. I sorted it to here on TradingView to high importance. I'm not interested in all those news. I'm also not interested in all the news from all of the different countries. Of course, if you are trading something, let's say like the Japanese yen, for example, you also want to add that. Of course, we can, by the way, do this here. Absolutely makes sense. I know we have some yen traders always watching as well. And we can see here we have durable goods, which are coming out tomorrow. We have, which I don't consider that important. I don't think it's going to have that massive impact on the markets. Interesting, of course, is going to be the GDP growth here, which comes out on, what do we have today? Today is Tuesday, so it comes out on Thursday at 2:30 p.m. CET. So it's going to be interesting if we saw if the American economy has grown. And this is of more importance because I expect if this is higher than expected, so if the growth is not 2.1%, but maybe 2.3 or 2.4%, we're for sure going to see a very positive effect on the markets, because when this ghost of recession that so many people, that the mainstream media is expecting, is a little bit out of the window. So for sure, we're going to have a closer look on that and what it means once it's released. For everybody here that is watching from Europe, of course, interesting, the European Union, the inflation rate forecasted coming down to 4.5%. I think Europe's still lagging there when we see the US inflation rate already well below 4%. So let's see, hopefully that one is going to be better again. And then later that day on, that is Friday, core price index, personal income, personal spending, also not probably going to have that much effect on the market. I think really the next important numbers coming out besides the GDP growth is going to be really here the non-farm payrolls on October 6th. So that's next week, Friday. We are going to do, of course, a live webinar with live trading. Also, again, we still have some catching up to do from the last trades that went not so well last time. First time we really lost some significant money. Let me put it like this. Good. I see quite a number of viewers today, 105 viewers. So welcome everybody. Let's have a quick look here at the general market structure. And I use here a website, a quantitative website called Into the Cryptoverse. Highly recommended. I don't have any affiliation with them or anything. If you like something like this, check them out. They cost a bit of money, but I think it's money well spent. And one of the things long term I always like to look at there is this chart. It's called Bitcoin price color coded by risk level. So basically it shows, we can have a look here for the total market cap, by the way, how risky at what point in the past the cryptocurrency markets were. And you can see it always follows this color pattern. It comes out of a dark blue. So you can see this here 2012. We saw this 2015, 2014. We saw this 2019. We, of course, saw that to a lesser extent also here in 2022. The markets, which means this blue means the markets are very risk averse at the moment. It's basically this sentiment where nobody wants to touch cryptocurrencies anymore. And this is always followed by this greener area. This is also the area we are in. I like to call this area the time of depression. It's also nobody's really interested in cryptocurrencies anymore. Trading volume is low, which is super low in September, by the way, across all exchanges. The general interest is not there anymore. You don't see maybe influencers so active anymore. Yeah, nobody has the laser eyes and so on anymore. And then after this prolonged phase, which can last for quite a while, and for us here, it has lasted already since the beginning of the year, then you enter in this mania phase. So symbolized here by those yellow and red dots. So the last time we were in that phase was here 2021. Even here, when we actually made our all-time high at 69,000 US dollars, it was considered by risk levels, by the sentiment, not the riskiest we've been. But this is normally then the area when everybody, when your neighbor, when your dog, when your grandma starts asking you about Bitcoin or any altcoins and so on and so forth, when the craze is really on. And this is, by the way, then the time to slowly switch, go out of the market again, which is extremely difficult, of course, because everybody's positive. But why am I showing you this? Because for sure, over the course now of the last quarter, 2023, then beginning of 2024, we are going to see the sentiment slowly switch into the yellow, and then the new bull cycle, the new fun is beginning. So if you have survived the bear market up to this point, congratulations, because you have been through the worst already. It's a matter of holding on now, really, to this. So there's light at the end of the tunnel, so to say. Last but not least, let's have a quick look here at how the altcoin market is doing. And we see here we are somewhere in the neutral zone. I use this index also here provided by Into the Cryptoverse called Altcoin Season Index, which measures over the course of the last 90 days how Bitcoin performed in comparison to the altcoin market. And we can see here over the course of the last 90 days, Bitcoin somewhere in the middle. So you had everything on the left here was performing better than Bitcoin. This excludes stable coins like TIFA US dollar coin, and so on and so forth. By the way, everything here to the right has performed worse of Bitcoin. Now, when Bitcoin outperforms every other altcoin, this is when you enter this green area here. You usually also see when Bitcoin dominance going up, you should actually act a bit risk averse then, meaning like this is the time to slowly switch back into altcoins. On the other hand, when we enter this red zone here where altcoins are outperforming Bitcoins over the course of the last 90 days, then normally is the time to be anti-cyclical, to switch back to Bitcoin again. So how can you trade this? For example, with a trading pair, Bitcoin versus Ether, that we here at PrimeXBT, of course, have also on our trading platform. So at the moment here in the middle, so last 90 days, not much going on there. We are somewhere in the middle. Pretty much half of the altcoins perform better, half of the altcoins perform worse. what I expect a little bit to happen now, honestly speaking, is that we, in the fourth quarter of 2023, enter more into this green zone where Bitcoin will be outperforming altcoins, because the altcoins normally start catching up then once the bull run really begins, once the interest is there, once, all these new projects suddenly start popping up again. I mean, during the last bull run, it was for sure NFTs and DeFi. I don't know yet what the next hype is going to be. Maybe it's going to be AI coins, if I have to make a guess there. Maybe it's going to be institutional traders entering Bitcoin, entering Ethereum. We don't really know that. Maybe leave a comment here what you think the next hype is going to be. One thing for sure, there is going to be a next hype. There's nothing more seasonal than cryptocurrencies, in my opinion. However, we also should get used to that we are not going to see those absolute bonkers returns anymore. So I don't think that we are going to see Bitcoin like at $1 million or something like this. Yeah, so this is the week ahead, and a little bit more of, than the week ahead, in my opinion. So stay patient. I think this is really the important message today. Stay patient. Wait for the levels to come, the zones of support and resistance. And you can see here how well pretty much for all of the last 2 quarters of 2023, you could play the markets just with support and resistance levels. Markets adhere to support and resistance levels. Those support and resistance levels also give you always a very good risk-reward ratio, because you can place your stop loss slightly above the resistance if you want to go short. You can place your stop loss slightly below the support if you want to go long, for example. Your upside potential, the upside potential of your position is always going to be probably 3, 4, or 5 times of what you need to risk. And this is a super good risk-reward ratio, because when you trade like this, you only need to be correct in like 25 or 20% of all the times with your trades, and you are still earning money there. Then. So this is the game to play at the moment. Should we break over 31,000 or under 23,700, then the whole picture is going to change a little bit. But at the moment, I don't bet. I think we're pretty rock solid here at 25 and 23,700. And I think on the upside here, it's also extremely difficult to get above this level, because we have this natural resistance here at 28,500. We have the 200 days moving average at 27,900. Where currently we have the yellow line, which is the 100 days moving average. So, I mean, needs a lot of demand in the market to buy cryptocurrency, to buy Bitcoin, to get over that. So that's, at the moment, is a bit the natural zone to short, although I prefer the long positioning because, like I said, I think we are slowly transitioning into a bull market again. The long position somewhere here between 25,000 and 23,700. Of course, I'm going to update you on this also on Telegram, should I personally choose to do any positioning there. Yeah, that's it from my side for today. Quick update. If anybody has any questions, ask them now. But I see you guys are a little bit silent today. That's good. That means you can concentrate more on your trading. This week, Friday, we're going to have another live stream also about copy trading. So if you have some time at, I think it's 5 p.m. UTC, 7 p.m. CET, come and join me there, where I want to explore the copy trading platform here at PrimeXBT a little bit more and show you some secrets how to find good strategies there, because there are 15,000 strategies on there. And of course, it's a bit of an art to find the ones that have a good chance of earning you some money. So this is something we're going to do on Friday. If you have some time, drop by. Until then, I can only say, remember to always use a stop loss. Happy